Let's go. This one, I'm gonna unlock a secret for you that nobody else is willing to tell you. Buy high and sell low. Oh my God, bro. Look, I didn't make that mistake. I didn't say that wrong. Stay tuned, watch the video, and I'm telling you this ain't clickbait. Let's go. Buy high, sell low, roll that intro.
Have faith in your mind, have faith in your brand, invest in yourself, transform in your time. Have faith in your mind, have faith in your brand, invest in yourself, transform in your time. Trading get paid, trading get paid, trading get paid, trading get paid, trading get paid.
We are going to jump into it, all right? So we're looking at GBPUSD 30-minute chart, and now let me just give you a little bit of clarification. Basing works for every pair on any time frame, all right? It's not something that you have to do on one time frame. It works for any time frame on all pairs, okay? Now, with that being said, let me grab my annotation, and you can see here, let's take a look at this move right here, okay? Let's take a look at that. And you can see on the chart where price has moved up, went sideways, and moved down, right? You can see that pretty clearly. You see that price moved down, sideways, and then up. You see that price moved up, sideways, and then down. You see that price moved up, sideways, and then down. Down, sideways, and then up. You see this over and over and over again in the market. Down, sideways, up. Down, sideways, up. We see that all like over and over again in the market, okay? These are what we call base patterns. When we see price getting a strong move in any one direction, we know that there is obviously control in the market. So if you have GBP and USD, right? You gotta love that beautiful looking U, right? And GBP is moving up and USD is moving down, then we would expect for the price of GBPUSD to move in an upward direction, right? That's pretty simple. We would expect that if GBP is strong and USD is weak, that GBP would move up. That's pretty simple. All right. Now, if it's the other way around and GBP is moving down, or I'm sorry, up, and GBP is moving down, then we would expect for price to move down, right? Because now the base currency, GBP, is lesser than or weaker than the quote currency, which is USD, and that means that price for the pair is going to drop. All right, that's pretty simple, that's pretty basic. Now, here's where it gets tricky, and it's not tricky, it's just, you know, more involved. What if both are going up, right? What if both are going up at equal strength? If both currencies are going in, are bullish in an equal strength, well, what's going to happen is you're going to have sideways movement. As you know, it goes up and they're at the same level of strength, it's not really going to move a lot because they're even, right? So next question is, what happens if they're both moving down? And I know we're kind of like in basic class right now, right? Both of them are moving down at the same volume or at the same volatility. We're going to get sideways movement. Now, here's where it gets interesting. Even more interesting. GBP is moving up and USD is also moving up, but just not quite as strong. Not quite as strong, okay? What that's going to tell you is what? You're going to end up with a down move, but it's not going to be a real strong down move. It's not going to be real strong because this excess movement is bigger than the movement that's in USD. So, oh, I'm sorry, it's going to go up. I meant to say up. Up, but it's not going to be going up very strong. Okay, now if it's the other way around and US dollar is dropping, GBP is dropping, but not quite as fast. It goes up, but not really fast. So there's a lot of different variables to understand, and it all comes down to one thing, and that is currency strength. Everything comes back to the strength and the volume that's in the market for any one currency. So in this particular pair, we're looking at GBPUSD, and we see that price is moving up. Then we see that we get this big spike here, and we get prices moving sideways, and then price moves down. We see right here, price gets big dump off right there, and then price moves sideways, and then price moves up. We see that over and over in the market again. And here's what that is called. It's rally base drop, drop base rally, rally base rally, and drop base drop. Rally base rally is a continuation. Rally base drop is a reversal. Drop base rally is a reversal. Drop base drop is a continuation. These are the 4 base patterns right here. Okay, these are the 4 base patterns. Now, here's the cool thing about it. Let's move the screen so I can show you with some markers real quick. If that's the case, and we're looking at this type of a move, let me grab my annotation back. Let's say, for an example, we're looking at a rally base rally. Okay, so we get prices moving up, then we get some sideways movement, and then price moves up. We got an uptrend, we have a range consolidation, and we have an uptrend. Okay, so really what we have here is we have a low, a high, right? A higher low and a higher high. It's really just simple structure. Now, with that being said, how do we enter this trade? Because most of us want to buy a trade from down here, and that sounds good. We want to buy and we want to get all of it. But most of the time, the truth is that it's just not feasible to try to get every pip that's in the market. Why? Because yes, we want to buy low and sell high. And some of you already know what I'm going to say because it's a recap for some of you. We want to buy low and we want to sell high. That's what we are always taught to do when it comes to investing. Buy low, sell high. This is all profit, and that's awesome. Except that when this first happens, we have no confirmation that it is going to do that. We have no confirmation. At that level, we're kind of guessing. We're kind of saying, yeah, it's low, so we're going to buy because it's low, but we don't have any indication that price is going to rise right now. You ever look at like the housing market and it's like prices of homes are cheap and you're like, man, maybe I should buy an investment property right now. But then you're kind of like, man, I don't know. Is it going to go lower? Maybe I should wait a little while. And then all of a sudden, before you know it, price is starting to rise again. And you waited too long. Or maybe you got in and then price continued to drop. You know, so many people have done that over the years where they've bought a property and then price, you know, they're thinking that price has got to be, it can't go any lower than this. And they buy and price continues to go lower. You know, there's no confirmation, right? So would you rather buy here, right? Or would you rather buy here? And the truth is, yes, we'd all rather buy here, but the safer buy is right here. That's the safer buy. Why? Because there's confirmation. What it's telling us is that we know that there is bullish volume in the market. And now business is being done to let the buyers get another position in the market. And so what happens is when we see these base patterns form, rally, base, and we see that breakout at the top, we want to buy right here at that retest. Because at that retest right there, that tiny little retest right there, that tells us that it is time for another big push up, and that this base we see, this consolidation in the market, was really just exactly what it sounds like. It was a consolidation of funds. There are funds in the market, buyers and sellers, and there comes a point where either the buyers outweigh the sellers or the sellers outweigh the buyers. And we have to allow that to happen. Once that happens, then we can make a decision. So in this case, we see that there is a buy momentum in the market. We see that there's an imbalance, and so it's got to get balanced out. Once that is balanced out and we see that, we get a breakout of that consolidation. We get the retest right there, and that's where we would enter the market. And that's where we would get a safe trade. So yes, we're paying a higher price there than if we were to get in and that move down here. Yes, we're paying more. All right. So man, what kind of advice is this guy giving me? Buy high, right? No, I'm not telling you to buy high. I'm telling you to buy safe. I'm not telling you to buy a higher price or spend more money. What I'm telling you is to buy a confirmation. Buy something that has already been tried and true, right? You know, it's like this. Think of it this way. If you get in on a penny stock, there is a chance for a home run. Man, you could get in on a penny stock, or one of those real cheap stocks, or the altcoins. If you're a crypto guy, you can get on one of these altcoins and get it for a penny. And man, if it goes to $1, right? How many of us have said if SHIB goes to $1, you know what I mean? Or if Dogecoin go, you know, one of these type of things. Well, we've been waiting for 4 years now. You know, and I'm not saying it's not going to happen. I don't know. I got some SHIB sitting in the side, you know, hoping that it goes up to $1. If it does, I'm gonna be a multimillionaire. But here's the thing. Would you rather have, you know, somebody say, I can sell you this for a penny and I don't really know if it's going to go up or not, or I can sell you this for $1 and I know it's going to go up. You know, I'll sell you this house here and I'm gonna sell it to you for, you know, $1,000. But man, I don't know if it's ever going to be able to be sold. I mean, it's pretty bad. There was a fire in the house and there was all kind of, you know, it's pretty bad. I can sell you this house over here and I can sell it to you for 100,000, but it's turnkey and I know you can get 300 for it. Man, now we're talking, you know what I mean? So it's like this. Do you want to spend more on something that's a sure thing? Or do you want to spend less on something that's a gamble? And that's what we have to ask ourselves. What type of investing do you want to do? Because if you're looking to gamble, you might as well just go to the casino and go hit the slots or something. I don't know. That's not my thing. I don't do that. But, you know, sometimes when we're buying, and I'm not trying to, you know, knock anybody's style here, but when we're buying down there, sometimes we're just throwing the dice, 7 on black. Come on, baby, big money, big money. You know, like we're just hoping for the best, because there's nothing there that says this is an opportunity for us to buy, right? But once we have a confirmation in the market, once we have something that says, okay, this is a true trend at this point, and there is going to be more movement, there is going to be more volume, at that point, yes, we're paying a premium. Yes, we're getting in at a higher price, but we're getting in on a sure thing, right? So does that make sense to everybody so far? What I want us to do is I want us to look for safe entries in every investment that we make. I'm not out here trying to have somebody hit a home run on every time we take a trade. I've hit some big trades, all right? My biggest trade ever, I got 42,000 in one trade, $42,000 profit in one trade. Biggest trade I ever made. All right. I've been trading for since 2015 or something. So 8 years. I got $42,000 once. So if you're sitting around waiting for home runs, you know, like that's just not, you know what I mean? Like you're gonna be sitting around a while. And I'm gonna tell you this, especially in my early days of trading. I'm just talking to you now in fact, I want you to see my face for a second. Let me talk to you for a minute. I want to just tell you the truth here. For every time I've gotten in those trades that were home swinging for the fences like that, my trade percentage has gone down. You see the trade setups I'm sending are hitting ridiculously high percentages. There's not very many people that are giving you trade setups that reach these levels of percentage that I'm giving you. All right. And I'm saying that for a reason. I'm not bragging. I'm just saying that for a reason. When I start swinging for the fences and trying to go for the big, you know, home run, the truth is that percentage drops drastically. And I'm not hitting that 85, 90 something percent, you know, in trades. Now you start going for the fences, trying to get these massive trades and trying to, you know, get the best, earliest entry. That's why these guys go down and are down trading at 40, 50%, you know? So the truth is that if we want to have a high trade percentage and we want our wins to outweigh our losses, then we need to take safe trades, not every trade. I don't trade every trade that comes along. There are many trades. Let me tell you right now, look at this. There are many trades that come that I just don't take, and they end up panning out beautifully, but I didn't take it because it didn't meet my criteria. If it doesn't meet my criteria, it may work for you. You might have a strategy that's different. That's fine, right? But if it doesn't meet my criteria, I'm not taking that trade, right? So, and that's how I keep my percentages up. That's how I make sure that I stay on the winning side, because I have a checklist. I have things that I need to see happen. If I don't see a volume candle, I'm out. I'm not looking for it. I'm not even getting in. I'm not even thinking about entry if there's no volume in the market, right? These are things we have to consider. So I guess my whole point in giving you this little mindset portion here is I don't want you swinging for the fences. I really don't, because it's not long-term sustainable, right? Anybody who knows about baseball, and I know baseball is evolving even now, right? Is evolving even now. But typically, I can't say everybody, because you got the rare Shohei Ohtani out there that just can do anything, right? But typically, guys that hit a lot of home runs also strike out a lot. They might not get on base. Their on base percentage and their batting average typically isn't as high because they're swinging for the fences. You know, you back in the day when I was a little younger, you know, you had the Mark McGuires and the Sammy Sosas and the Jose Cansecos and all these guys, and they would hit a lot of home runs, but they struck out a lot, you know? Hey, man, we ain't gonna talk about Aaron. We ain't gonna talk about Aaron Judge, you know? We ain't gonna talk about Aaron Judge, man. But, you know, the truth is that I don't want that for you. I don't want you to have a good Facebook post, but a bad trading account. I don't want you to have a nice Instagram post, but a bad trading account. Yeah, what do I mean by that? Hey guys, check this out. I just made $300 in 4 minutes. You know, that sounds good. But how about we tell them about the other 4 trades that you took and lost because you was trying to swing for the fences every time, you know? Man, guys, I just caught this runner. Caught it at the very beginning. It was beautiful. That sounds good. Awesome, man. How'd you do it? I'm not really sure. You know, well, that's not sustainable, right? So at some point, what we want to make sure is that we have confirmation. All right. I know I'm kind of beating a dead horse here, but I want to drill it into your head because it really makes, this is more important than the strategy itself. The mindset portion of trading is more important than the strategy itself. I've proven it to you in the past. You can take a 50-50 strategy and with the right mindset and risk management plan, make money, right? I can take your 50-50 strategy and show you how to make money every week. Win one, lose one, win one, lose one, win one, lose one, and make money every week. Why? Because mindset and risk management are dialed in. That's more important than a winning trade strategy. But now that we have a mindset that says, I'm looking for confirmed positions, I'm not taking trades just because it looks like it's going up. I'm taking trades because I see that there is confirmation of a move up. Now you can take that same mindset and risk management that's dialed in and add, instead of 50% win percentage, maybe a 70% win percentage, 80%. Maybe you work your way and get all the way up, you know? And now suddenly the profits are exponential because you're not sitting here and giving money back to the broker. You're not sitting here losing these battles with the broker. You're winning and you're not giving the money back. Okay, so let's get back to the trading strategy. So let me share my screen again. All right, so check this out. Let's say we're looking at this trade right here. Now, let me grab this annotation. Is it better to get in up here, or is it better to get in right here? Is it better? Let me see somebody put it in the chat. Is it better to get in up here, or is it better to get in right here? Second one, all day. Why? Let's examine. Let's just examine it real quick before we even try to do anything else. Let's examine it, right? Look, boom, you got a nice move down. You got some sideways movement, right? You should be looking good. But where do you get in? Where do you get in? Is that an entry candle? Is that an entry candle? I mean, that could be an entry candle, this big yellow candle right there. But you still have to worry about this, right? No, none of those. Why? Because you're still fighting with volume. And the reason was because look at it. Yes, it's sideways movement. Yes, it's a base. But look at this base. The more volume that you see in this base is bullish. Look at these bullish candles and look at these bearish candles. Big bulls, smaller bears. Big bulls, smaller bears, right? You see that? Why would we want to get into a sell or take a position when it could be, we don't know, but it could be that the bulls are trying to take over? Why would I take a sell when it looks like the bulls are trying to take over, right? That doesn't make sense. So what I'm going to do is I'm going to be patient and I'm going to wait. And I'm going to say to myself, I know that we have strong bearish volume, but I'm also seeing some indecision in here. So if I'm going to take a trade, the only thing I'm really looking for is to see, is this bearish volume going to continue? And if it does, great. If it doesn't, then I need a clear rejection, because until this volume right here is clearly broken, I'm not taking a buy. Why would I buy with so much sell pressure? But then why would I sell with so much buy pressure? There comes the indecision. So I need to say the overall market is showing more bear pressure than bull pressure, more sell than buy. But because I have indecision in here, then I need to be clear about what I'm doing. So here's what happens. Price comes, moves around. We get some movement, but then it pushes right back down. There's your fake out. First breakout is a fake out. You guys have heard me say it a million times. The first breakout is typically the fake out. So you saw that you had a breakout right here. Watch this. Whenever you see a base, you take it and you box it up. You take it and you box it up, right? Now, you get the breakout, but it's a fake out. We know that the first breakout is typically the fake out. Why? Because look at how much bear pressure is in here, or sell pressure. So what do? We wait. And as that market continues, we wait for better position. So now we see that there's starting to be, look, boom, now we're starting to get these big booming volume candles again. Uh-oh, I'm happy. Things are starting to look back in the sell direction. We just got a fake out. It tried to go up, but the bears said no. It tried to break to the upside, but the sellers said no. So at the end of the day, the buy pressure from all of these little small moves up was not enough to break the base and reverse the trend. So because it was not enough, then the next assumption must be that there is still too much sell pressure for the buy pressure to take over. Does everybody understand that so far? I want to make sure we're all on the same page. So as soon as we see that buy pressure, buy pressure, buy pressure, buy pressure, none of it's enough. None of it's enough. It gets the fake out, and then instantly we start to see sell volume come in the market. Big booming candles. You see that? Now we're starting to think, let's see how price reacts to the bottom. Let's see how price reacts to the downside. I definitely can talk about that, Kenny. Good question. Once we see that there's sell pressure in the market, we're looking for price to break out. We're looking for price to break out. Now, you see these wicks? These wicks tell a story. They're not there for no reason. It's telling you that there is a base inside of a base, which is, I'm not getting into that tonight, but I will tell you to go watch my videos on wave theory. Okay, very quickly, that's an uptrend. Well, guess what? Inside of that, if that's a 1 hour uptrend, on the 15-minute, it's gonna look like this, right? There's gonna be moves inside of moves. This one wave on the 1 hour is gonna have a trend on the 15-minute. Does that make sense? So, and go watch my classes on that. But if this is a base pattern or a base, then this is a base pattern inside of it. Let me get a lot of marks on here. If this is a base, right, then on the 30-minute, I wonder what's happening on the 5-minute. Drop, base, drop. That's on the 5-minute. I'm not saying to go look at the 5-minute. I'm just telling you what's happening. So once you see that these wicks start forming and that there's a base happening at the bottom of your base, okay, you can literally just take this box and move it to your wicks. Move it into your wicks. Okay, boom, 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 boom. I know you got a couple little that poke out right there, but the consistency is right there. Once you have a breakout, once you see a volume breakout right there, stop loss behind your structure, you can go back to here for a take profit one, but that doesn't make sense. What are we going to do? We're going to look left and we're going to go to structure. So we look back, and you can see here, this ends up being a beautiful, beautiful trade, right? Beautiful breakout, instant profit, and you trail your stop as soon as you're into profit, all on a breakout of your base pattern. Soon as that thing breaks, you go and you get your entry and you are in. Now,